Pipestone Capital Corporation. Advantages of forfaiting: enhancing international trade finance. Forfaiting, a financial instrument gaining popularity in international trade, offers a range of advantages for exporters and financial institutions alike. This process involves the purchase of trade receivables, providing immediate cash flow and mitigating the risk of non-payment. Here are some key advantages. Risk mitigation: forfaiting acts as a shield against the uncertainty of non-payment. By transferring the credit risk from the exporter to a forfaiter, the exporter can confidently engage in international trade without the fear of default. Cost elimination: one of the primary advantages is the elimination of collection costs. Forfaiting frees the exporter from the burden of chasing payments, as the forfaiter assumes responsibility for collecting payments from the importer. Immediate cash flow: forfaiting converts a credit sale into a cash sale, ensuring immediate cash flow for the exporter. This liquidity injection is particularly beneficial for companies facing working capital constraints or those seeking to reinvest funds quickly. Currency appreciation profits: commercial banks engaging in forfaiting can reap profits if the currency in which the transaction is denominated appreciates. Purchasing instruments with high returns becomes an attractive proposition, contributing to the financial gains for the banks involved. Reduced risk through bank involvement: the collaboration of both exporter and importer banks minimizes risks associated with forfaiting. This involvement ensures a structured and secure transaction environment, further bolstering the attractiveness of forfaiting as a financing option. Flexibility and customization: forfaiters offer flexibility in tailoring deals to meet the specific needs of sellers of capital goods. This adaptability makes forfaiting suitable for a variety of international transactions, enhancing its versatility. Disadvantages of forfaiting: considerations in international trade. While forfaiting presents numerous advantages, it is essential to be aware of certain drawbacks associated with this financial instrument. Currency limitations: forfaiting predominantly involves major, highly liquid currencies. This limitation can exclude transactions in smaller or less traded currencies, potentially restricting its applicability in certain markets. Higher export costs: despite reducing the risk for exporters, forfaiting often results in higher export costs. The exporter might bear additional expenses, impacting the overall competitiveness of the product or service in the international market. Importer responsibility for export costs: the standard pricing in a forfaiting arrangement may include higher export costs, which are typically borne by the importer. This can affect the importer's willingness to engage in forfaiting transactions. Transaction size restrictions: forfaiting is typically applicable to transactions exceeding a certain sum. Smaller transactions may not qualify for forfaiting facilities, limiting its usability for all types of trade deals. In conclusion, while forfaiting offers significant benefits in terms of risk mitigation, immediate cash flow, and flexibility in international trade, potential users should carefully weigh these advantages against the associated limitations to determine its suitability for specific transactions. Understanding the nuances of forfaiting is crucial for effectively leveraging this financial tool in the complex landscape of global commerce. Thanks for watching.